Welcome. My name is Sasha Moore, and I'm delighted to welcome you today to today's Change in Dynamic Mortgage Broker Market live webinar, which will be moderated by industry veteran and financial services specialist Nick Young, who is the Managing Director and founder of the leading trailbook company, Trail Homes. Welcome, Nick.
Thank you, Sasha, and great to be here. And thank you for providing this moderation and setting up this opportunity this morning for us all to think about where the industry might be going.
Oh, absolutely. It's going to be an action-packed session. So on that note, let me introduce you to the panelists to today. So we have Rob Thomas with us, who is the National Director for Member Services at LMG. Welcome, Rob.
Thanks, Sasha. Thanks for having us. Thanks for having me, and thanks for the invite, Nick. Glad to be here.
Absolutely. So, Rob, from your perspective, you're obviously going to talk about the change in the mortgage broker market from an aggregator lens. Is there anything you'd like to add to that?
No, just probably give the aggregation perspective on what I've seen. I've been in third party for nearly 25 years. So just what I've seen happen, and sometimes the past is the best predictor of the future. So hopefully I can give the audience some insights.
Yeah, fantastic. And I think particularly that bird's eye view will be really valuable. We also have with us Sean Reid, who is the Managing Director at MoneyQuest Group. Welcome, Sean.
Good morning. How are you?
I'm great. Thank you for joining us today. So what lens are you going to bring?
So similar to Rob, I've been in the industry 25 years. He just has more hair than me for some reason. But I've sort of had a broad exposure to third party. I was a BDM once upon a time at Westpac. Moved to a US lender during the GFC, which is sort of that extra step of extra level. When it's a US-based lender. And then I went across to choice aggregation, which I was at for many, many years. So I've had a lot of experience in aggregation, and more recently in the last 5 months as the MD of MoneyQuest Group, which has been a joy. And MoneyQuest was my customer for many years, since its inception, actually. So to come across was a good thing. And actually, Nick was also my customer when I was at choice aggregation. But he didn't invite me to come and work with him. So yes, here I am at MoneyQuest.
Fantastic. Thank you, Sean. And we also have Jamie Savory, who is the founder of Gippsland Financial Solutions. Welcome, Jamie.
Thank you. Thank you very much. And thanks, Nick, for the invite. I'll be looking at it from a broker and also a small business perspective. So I've been running and operating GFS now for 11 years. And prior to that, I was at CommBank for about 11 years as well as a banker. So banker to broker. And now I run 3 separate businesses with a bunch of a female-led team. So I'll be coming at from the ground roots, I guess.
I love that. It'll be good to get your opinions just to sort of round out that bird's eye view. So as we've mentioned, the goal of this webinar is to provide commentary from industry specialists about the rapidly evolving mortgage broker section. And without a doubt, the only constant is change. The mortgage broker market continues to evolve, be affected by simultaneous factors, including technological advancements, shifting consumer expectations, changing lender and product segments and regulatory demands, as well as local market conditions and increasing geopolitical pressure. So in particular, we're going to get the panelists' insights and what the next couple of years will look like, taking into account many concurrent areas that are affecting market, including changes to the broking model and expected broker market share, potential threats to the industry, including regulatory shifts, blocks to new brokers, and why there's a decrease in the number of women despite industry efforts in the sector. Whether technology and AI will weaken or strengthen a broker value proposition, assessing if the dominance of the major banks will continue. We'll also look at the progression of the aggregator landscape, including some key trends in that area, as well as I mentioned, evolving consumer expectations and how this is affecting how brokers are engaging with clients. So please feel free to feed in any questions you have for the panel via the chat function. We've got an action-packed session, so we will get to these if and when we can. But for now, stay tuned. Nick, over to you.
Thank you, Sasha. And we might start off with some rapid fire questions. So for the panelists. So the idea is we're focusing on where the industry is going to be in 5 years' time. So We'll start with you, Jamie. Broker market share. We're currently understand at about 76%. So we'll take that as read that we're at 76% of all loans are going to brokers, or being handled by brokers. Where do you think it'll be? And I don't want a this or a bit more, a bit less. I want a precise number. Where are we going to be in 5 years' time? What's the precise percentage going to be?
Well, I certainly think in regional locations it'll grow, and I speak regionally because that's where I'm from predominantly. But regionally, I think we're going to get to high 80s, if I'm really honest, and that is just simply because we've got lenders shutting branches, whether they're doing it now or in 12 months' time, and country people still want to sit and chat. So I see that number growing, Nick, from a residential point of view. I think it'll cap out because there still is a need for people to go direct to bank. But I do think it'll grow.
Can't do high 80s. Give me a number.
Look, I like to be clean, so I'm going to say 89%.
89. Rob.
You can come back to me in 5 years' time and tell me how accurate I was.
Rob, you better, worse? 89 is the number at the moment.
I totally agree with Jamie in the regional areas. I reckon that will be mid to high 80s, but I reckon overall broker market share, I'm predicting it'll be around about the 80% mark.
80%. Okay. You're not nearly as aggressive as Jamie. Sean, precise number.
All right. Well, I'm very unbiased when it comes to broker, having only spent the last 25 years in it. So I'd like to think 100, but we know that's not right. So, Nick, I think, look, 80% is probably where I think it'll go in the next 5 years. But that's in resi. I think where the growth will come is in other products, with brokers expanding their businesses into other segments. Everybody talks about, diversification, but, we're already starting to see, improvements in, incremental improvements in other components as the broker businesses get more broad. Other services as well, they start to grow into. So yeah, I think 80. The bank will always have, and lenders will always have I suppose a consumer that wants to deal with them direct. There is that path that's not going to disappear. We just got to keep educating customers on best interest duty, Nick. So
I agree with you, Sean, that it's going to be the other areas beyond resi that might show the real growth. But Jamie, I've got to come back to you. 89. You've said regional, and I can understand where you're coming from, but regional unfortunately doesn't drive Australia. You may not like to hear that, but most of Australians actually live in metro. So to get to 89, you're going to need metro to really adopt.
I don't really care what happens in the metro area though, Nick. I just care about regionally.
So do you think though that in metro we're going to see this continuing strong trend, or do you really think it is just about the regional areas?
I think it's just getting harder and harder, not only in terms of the I guess consumers doing it themselves to get loans approved, but I also think it's harder and harder for clients to get to branches and to do video conferencing in the times that banks are available. I think it's the service that the broking channel provides in terms of flexibility in such a busy life that I can just see it growing. 89% I'm paid based on, my business is based on what we write. So obviously I want to see that grow. But I can't speak for the metro space, but I can speak for the whole of Gippsland, and our volumes are certainly continuing to grow month on month. So we're growing at a much faster rate than what the market is in terms of market share. So we're growing significantly. I just even with all of the AI being introduced, but with regards to the flexibility from broker space, from our end, I just can't see it slowing down.
Okay, well let's continue on. Next rapid fire question: number of broking firms. Now, this is an interesting one because depending on who you talk to, the number of broking firms, number of brokers. We'll start with number of brokers. So, depending on who you talk to, they say that there's 22,000 brokers, but some say, oh no, there's only 15,000 that are actually active. But let's just run with whether they're active or inactive. Jamie, are we going to see for you to get to your 89%, presumably there's going to have to be a significant increase in the number of brokers? Do you go along with that line of thinking or not?
I don't know if I think we've got to get smarter and get a bit more, and I think AI will help us a lot with that. I think we have to get smarter in terms of how to get deals out quicker. And I'm not necessarily convinced that we need to double our brokers. I think the brokers need to write more loans than they currently are and potentially have more support behind them in terms of tech is a huge piece, but also business structure, shared resources. There's a bunch of ways to increase market share. And that doesn't mean just doubling, in my opinion, doesn't mean just doubling the number of brokers.
Okay, Rob. More brokers, same number?
I think there'll be more brokers, definitely. I think there'll be a lot more brokers. I think to your next rapid fire question, I'll probably have a different answer, but there'll be definitely more brokers. But as an industry, like the average age of our group is around about 47. So we've got a short time frame to bring new brokers in the industry to replace the existing ones. But I still think in 5 years' time, there'll be more brokers.
Okay. Sean?
I'm on the same page there, with the exception, I think that there'll be more salaried brokers in broker businesses as they start to, to invest themselves. They start to scale more, and as I said, the different services, but also, having people that come in and work for them to look after their customers. So whether it be franchise, whether it be, broker's own brand, I think there'll be more salary brokers over time, is my view. There are a lot of brokers in the industry who do the odd deal here or there. I think slowly but surely that's changing. Because that's based on the costs. If you look at the cost to operate today, whether it's systems, whether it's tech, whether it's support tech, whether it's compliance, they're all adding up. So the cost to be a broker and write just a few deals is getting beyond what's possible nowadays. So we're seeing more of those sort of things change. So
Okay.
less brokers doing a little, more brokers doing more, and more salary brokers, if that makes sense. So with a net slight increase.
Okay, well, that probably leads us into the next and third of these rapid fire questions. The number of broking firms. Jamie?
I think that'll decrease. Just again, to follow on from what Sean said, just in regards to the cost. So if you've got those older generational people that just want to do it part-time, it's just going to be too expensive. So I do see the larger firms potentially buying them. I think also payroll tax in New South Wales will have a bit of an impact on that as well. Like I do think that the number of firms long-term will decrease.
So, Jamie, are you talking your book here a little bit? I mean, you're actually one of these larger firms, aren't you?
Oh, absolutely. If there's any attendees that want to look selling their book to me, just give me a ring. No,
Rob.
it's going to be the right fit. And I've spoken to you before about that, Nick. I do think the cost in terms of, annual reviews, best interest duty, all of that for the one person. I don't know. I rewind 11 years when I started, and if I'm a startup today, to be able to do the best for the client as a one-band show is bloody hard. From start to end, to make good money, to be able to make it so you can put food on the table. I think with what's required today, it's a big ask for a one-person show.
Rob, what do you agree with this idea that we might see less broking firms out there in 5 years' time?
Yeah, 100%, Nick. I think there's a few factors. Where payroll tax ends up will be a key determiner. But we're now seeing not only mergers and purchases and businesses, as I said, merging, we're now seeing private equity coming in and buying stakes in businesses, which is a bit of a recent phenomenon. So I reckon all those combined we'll see a reduction in broker businesses. There'll be bigger businesses, but there'll be less of them.
And Sean, you were talking before about the breadth of the mortgage broking industry. Would you be thinking also that the reason for this consolidation might be the fact that they're also going to be offering much broader services? Would you agree with that idea, Sean?
I think it's part of it, but it's also, we've got I suppose a broker community that have been around for quite some time in a lot of cases, and so they're looking to exit. So some of the older brokers who might have had a particular business model, and that's not all of them, obviously. There's some single operator. Everything's relying on them to do the work to look after their customers. Them exiting, selling to other businesses like Jamie's, who have that appetite to grow through acquisition or organically. So I think that's where the bigger businesses start to come, where that you buy the revenue. You've got a scale business that can service a customer. I think it's the same in any level of business, whether it's aggregation, whether it's broker, whether it's lender, to be honest.
Well, we're not getting too many arguments at this stage. This is very disappointing. So to summarise, we're seeing the industry market share growing, number of brokers growing, but number of firms decreasing. So we're going to see a concentration, I think is the summary of the panel of where we're at after that rapid fire question.
And the exiting is not necessarily, it's them choosing more so than being forced. So
and potentially funded by trail homes, of course.
Well, certainly in our example across our network, we have the capacity to help as well. Just we want to grow through acquisition, as you know, and we want to help our brokers do the same thing. So that's
So Jamie, I'm hesitant to ask you this question, but I want to ask the question about what a broking firm might look like in 5 years' time. So we've spoken about consolidation. So there's your broking firm, which is obviously quite a large one. But if I was to go to, let's just say the average broking firm today is most likely a one-man band, and it probably is a man. What's the average broking firm going to look like in 5 years' time?
I think it's going to be really hard to maintain that one man show, Nick, because the reality is that if you're doing a good job, which you should be, you're going to, because like I said, it's getting harder and harder in terms of the compliance, making sure you're ticking boxes right, making sure you're doing annual reviews. How do you do that all yourself and do it well? So I think there will become a part where if you're not doing it well, though, the consumer's going to go somewhere else because it's just so accessible now. You can just Google. 10 years ago, even, it was a lot different than what it is now. So I can't see there being a huge amount of those one-band shows left, because you've got to be able to answer the phone, because the consumer wants to be helped now. They don't want to return phone call in 2 hours' time. So I think as tech continues to grow, if you're not adapting to that and being able to be so responsive to the consumer, they're just going to go somewhere else. So I do feel like you're going to need that support from an admin perspective to be able to be getting back to the consumer or the client really quickly, because that's just the expectation of the generation coming through. I just can't see how it can be a one-person show.
So it's either one person may be supported by really good tech, or more likely 2 or 3 people supported by, again, good tech.
Yeah.
So Rob, given that line of thought, and I'm not going to let you just have a complete plug for LMG here, what's an aggregator got to do to answer this need and this changing need? What changes are we going to see from an aggregator as we start to support this type of business?
I just think, as Jamie said, tech's going to play an all important. So if you want to be a one-man band, I think you can still in 5 years' time still be relatively successful as a one-man band, but yeah, 100% got to embrace tech. And lean on your aggregator to teach you what's available at the moment and what's going on. The other thing is we've just launched the on-demand for you get help from an outsourcing company per file. So you can, instead of employing a full-time resource, you can employ them as you need them. If you don't embrace developments like that, or by embracing the tech, I think the one-man band will slowly die. And payroll tax will have a part to play in that as well anyway.
Okay, so that's what I might call the big aggregator. I mean, you are the biggest aggregator in the country. Sean, you're one of the more smaller specialised aggregators. Does your sort of support fall into step with Rob's, or does it have a slightly different focus to it?
I think it depends on what your customers, and by that I mean their brokers, want. So some will want a lot of support and a lot of help. Others will want to, I suppose, choose their own adventure. For me, in my conversations with brokers, and it's really important. Time is the most important thing, and how to use it. You've got to train and educate yourself to make sure you're keeping yourself ahead of things that are available to you. We had something recently which we'll probably touch on later, where we've had a whole lot of brokers testing scenario, which saves time on understanding lender policy. There's going to be a whole lot of different tools. You've got to keep up to date with those. Without repeating what others have said, that's just something that comes to mind for me. And as an aggregator, we've got to help train our brokers. So training and educating, making sure you're utilising the most of what's available to you. Yeah.
Okay. Good. All right. Well, let's move on. So at this stage of the game, we're all pretty bullish. We're all going to make lots of money. The market's going to grow. It's all going to be fantastic. So let's turn to the other side of the page. What could go wrong? So, Rob, from a regulatory point of view, what could go wrong? We've just been through a Royal Commission, but going forward, is there any dark clouds out there from a regulatory point of view that you can potentially see that might drop on us?
No, there isn't. I think we've already been through the worst. And as I said earlier, sometimes history is the best predictor of the future. And we all thought Royal Commission was the death knell of broking. But what was born out of the Royal Commission is, I think, the best thing to happen to the broking industry is the best interest duty. Like, I think all brokers, or most brokers, the vast majority of brokers, always looked after the best interest of their clients, but now we're regulated to do so. And the lenders aren't. The lenders look after themselves and their shareholders. Whereas us as brokers have to work in the best interest of the client and find the best deal for them at that point in time. So I think whenever there's that kind of, as I said, Royal Commission is absolute dark clouds, and it's born out of it, probably the best thing to happen to the mortgage broking industry, and something that LMG's 100% embraced.
So, Sean, you've lost all your hair as you keep on telling us because of your no doubt worrying about everything. So, any regulatory issues that you can perceive?
Was probably looking after you, Nick, as a customer. But look, I'd like to see it wind back a bit. We've got a lot of proof points, and I know what it is. And we, the main thing is brokers continue to again train and educate, take the time to understand who they're dealing with, referrers that are coming through. If you get referrals, is it too good to be true? Sometimes it is. So it's just, I think that we could be the bearers of our own destiny here by making sure we do the right thing, and making sure that the regulatory frameworks are there, that we're following them very well. And the customer complaints are a proof point, that one of the proof points that we're doing that. But I think there is hopefully opportunity in the future to wind back a bit, because we are the amount of effort and cost that this adds to the industry is significant. Yes, there is value out of it. Best interest duty, I'm not talking about winding anything like that back, but just, I suppose some of the red tape that brokers do have would be nice to have it, I suppose, wound back a little bit, Nick.
I certainly, and we're seeing this happening, the lenders certainly, I think, are complaining about they're bogged down by just too much red tape. And I think we as an industry would all agree with that. I agree with you, Sean. I think there is the scope to wind things back a little bit. It's too bureaucratic. But anyhow, enough of my thoughts. Jamie, commissions.
We love
We're
it.
going to see them go up, down, stay the same. What's going to happen?
Look, this is probably a Rob question, not a me question. To be really honest,
Rob next, but I thought I'd start with you.
I can't see that. To be really honest, I think when you compare with other countries, I think we do, and you're probably there'll be so many brokers on here that go, you're nuts, but I think we get paid quite well for what we do. I'd love to see them go up, don't get me wrong, but can I see them going up? No. I think there's a big spotlight on trail commission, and if we do, I think there needs to be personally more of a spotlight on those not actively looking after books but taking trail payments. That for me frustrates the living life out of me, because we pay so much to look after our back book. So I think that probably needs a bit of work as an industry. That I can see how we could come unstuck there, similar to the financial planning industry. So I think commissions are going to stay how they are. I don't want to see them drop, Nick, but I think they'll stay how they are for the next 5 years, in my opinion.
So, Rob, you've probably got the best vantage point. You're probably the closest to the lenders. What's your view on where we're going to see commissions moving, if at all, over the next 5 years?
Well, none of the lenders have said anything to us directly about commissions, but I'm sure it's probably one of their biggest expense items is their biggest expense item. So that it'll always be scrutinised by the lenders. The one thing I can see, and it has sort of been flagged, and Sean's probably been a lot more meetings than I have, is that like a broker gets paid the same, whether it's a one-touch deal or whether the bank's had to go back to them 100 times. I can see a point in time where lenders will start paying on quality and differentiating the commissions on quality.
Interesting point. Sean, you've, as Rob touched on, you in a previous role, you're basically were in charge of keeping all the lenders lined up for a major aggregator. What's your view on this? Sean, you've got your microphone off.
Yeah, I had to be the first one to do that, didn't I? Lots of interesting conversations over the years, Nick. And, we always talk the position of, this is a very competitive market. We, from a commissions point of view, work very hard to get to the position we're in. You talk about, the things that can impact it. Well, clawbacks, they were traditionally down around the, 3%. When cashbacks came into play, suddenly that changed dramatically. We saw the flows suddenly start to get much higher than that. So, that takes away from your revenue, 8 to 10% at one stage when the cashbacks were being done. So when you look at, clawback, net of offset, we're getting paid less in a lot of ways. The only thing that's kept our revenue up really is the average deal size going up. And some more customers, obviously, as people, more loans are available. So for me, the conversations with the lenders were always about, and certainly the others at LMG involved in this, Rob, but even more senior than me, was around how do we take cost out of the system for us, to make sure that, that there's benefits for everybody. So I don't think commissions will drop. There's a lot of competition in the marketplace. If they do, the competition is what's important to us, all right? So that we, I don't think everybody would go down that path. So, and we always work in the best interest of customers, but we do choose our lender panels. Yeah, is the only thing I'd say.
Yeah, I think the competition piece is the one that'll hold things in place. If we only had 4 lenders, then I reckon we'd see commissions wound back pretty smartly. But with the number of lenders out there at the moment, I think we're probably pretty safe state. Blocks to new brokers. This is a bit of a bugbear of mine. It's becoming harder and harder to get into the industry, and there's a number of reasons for this. But Rob, is this going to change, or do you think it's going to get worse or better, or it's just going to stay hard?
I think for the next probably 5 years, Nick, I think it will stay hard for new entrants, and that's probably where we'll have more brokers, but less businesses to set it up all on yourself. And especially ACL holders. I think new ACL holders might be another topic for discussion at another point in time. But yeah, I think it's going to probably stay the same. And there's probably bigger blocks actually into the commercial space is where we see the opportunity is in commercial space. But some lenders, you have to have 2 years commercial experience. So if every lender adopted the same stance, no one new could become a commercial broker, even if they've got commercial experience in the bank. So yeah, I think it's only going to, it'll probably stay the same, I'd say, Nick, for the next 5 years.
Yeah. Does anyone disagree with that it's going to still remain tough to become a broker? No, I'll take it you all agree with that. All right, Jamie, women. So I don't know how, but the last statistic that we've got in has the number of women, not dramatically, but the number of women in the industry acting as brokers falling. And I think I was shocked. I would have, if you asked me in the street, I'd say, oh, women are on the up and it's great and, rah, rah, rah. So I was personally very surprised to see the number of female brokers falling. And I just put it to you, why is this just a bit of a blip, or is there a real problem here? Talk to us about it.
I think it's actually harder than what people realise, and I'm going to just say this, but as a mum, it's bloody hard, and you can't do the job half. And by that I mean is you can't do it well part-time. So I think that makes it really, really hard if you've got small children or a family and your partner's working and you want a job that's flexible, is to do it well and to be able to be responsive to clients. And if you've got a team or you're trying to put somebody else on, I think it's really hard for work-life balance in our industry to do it well. So you can't just not answer the phone on a Thursday when there's a settlement not happening, or when finance is due because the baby's crying, or you've got to go to a school play, or whatever it is. And the reality is that most time, more than not, is that the mum has a different responsibility than what the father does. And that's just the bloody reality, whether you like it or not. That is just how it is. So I do think it's hard. I have a team of females, and not because intentionally. I have tried to employ men. It just doesn't work. Mate, that's on me completely. Like I'm.
No.
Rob will agree, but you know, like I do think it's hard. And when I started 11 years ago, I was very fortunate for my husband, and he picked up the slack at home. And you do get mum guilt. And fast forward 12 years time, and I'm not at school plays, and I missed out on a lot with the kids. And that was a choice we made as a family, Nick. So I think if you come into the industry really blindsided and you just see this rubbish on social media and you don't actually understand what is going on and what is the cogs behind the whole lot, is that I'm not surprised at all that it's lower than what you're expecting.
So when we were talking earlier about that one man band is going to find it tough and be squeezed out, I think what you're saying is that one woman band is going to find it even tougher. Is that
because
right?
even if you've got a really supportive husband, absolutely, I'm not suggesting that there's no supportive husband, because I've got one and he now works for me. But it's the guilt within yourself. It's not the way that the industry is. It's the guilt that you feel yourself by not being able to attend all those things as a parent. And generationally, it's normally the man that's the income producer or the main breadwinner. And I don't know how the industry fix it, because I think it's a bigger problem than our industry, to be quite frank. Like if you think about it realistically, we're not the only industry that has low women in the industry. I do think it's a bigger problem, but I don't have the fix for it. For me, we're growing at a rapid pace of women. And I look at other people's businesses and we attract like-minded people, but it's really hard even as a business owner. I'm about to have 2 go on maternity leave next month. And it's really hard because you want those women to come back, but you also can't just put 2 other women on and then not have them come back. So it is a real big juggle to be able to have a family, have a successful career or business. And I think the juggle and the struggle is real. Like it's hard.
This is not very positive, and I'm a positive man.
Sorry, I'm just telling you as it is, Nick.
Yeah, no, it's very interesting though. I was thinking as you were talking, does it mean that as we get this consolidation, that in fact there may be a bit of an inside run for women, in that you can provide an environment that does give them that bit of flexibility that they were looking for?
Well, you know, and my brokers that work for me, we've got flexibility because we're a larger group. So if someone goes on leave or there's issues, we can just pick up the slack. But if you go back to one of your other questions in regards to the one woman show, or you've even got 2 staff, like that's hard. It's nights, it's weekends, it's all these other things. I do think it gets hard, and I don't have the answer for you.
Well, let's take that one as a work in progress.
Nick, I've got a bit of a, so with LMG, we've had actually an increase in female participation.
Hey, here we go.
So we're nearly at 30% of our network is female brokers, and nearly 25% are business owners. I think the one thing we sort of pride ourselves on is our leading ladies community, which Jamie's a part of. And I think what you need to do is build strong communities. There's a couple of great examples in Victoria where 2 one woman bands look after each other's books when they go away, so they can go away and actually enjoy a holiday or do whatever. So I think building a strong community of like-minded women is something that we're proud of, and it's something that's held us in good stead. All of our leading lady events are sold out basically as soon as we release tickets. So I think it's building that real, and it's our best community that we've got. We've got 5 communities. Leading ladies, one of them. It's our strongest and most wanted community that we've got in LMG.
I think the champagne helps too. You provided those events. Not that I've been to one, Rob, but yeah, I think there is an opportunity there, Nick, for us all. And I don't say that lightly, but quite often, you know, in my time at Choice Aggregation, you know, in our top 10 brokers, you know, most of them were female. Even though the vast majority of our brokers weren't female, the top performers were female. So, and I think I've read research somewhere that females prefer to get advice from other females when it comes to home loans. There was a report somewhere, and I don't know if it was the MFAA, but it's just jumped to mind. And, you know, females are often the decision maker when it comes to finances at home. So the opportunity is there for, you know, to service customers better with and females. And maybe that's why the banks are getting the 20%, the 24% direct market share more with females in their businesses. I don't know, but yeah, I think certainly I've challenged Julian in our business. We've got 156 female brokers in the MoneyQuest group. Most of those are business owners, so individual business owners. So is there opportunity for PAYG type roles and giving advice when you're balancing life, work life? I don't know, Jamie, but certainly I've challenged Julie and Matatia in our business to have a strategy around this, and we're going to invest in it and test us in 12 months, Nick, and see how we go.
I think
Oh,
also, Nick, just to add to that, like obviously I'm involved with LMG, and you're right, Rob, they do a great, the aggregation group seem to do a lot. But I can honestly say that I've never been invited to an MFAA women's event ever. So I think maybe as an industry, the aggregators seem to do a great job, and I've seen a few different aggregation groups and what they
Yeah,
do.
they
But
are.
I think there's a bit of a room in to move and to grow from an MFAA and even an FBAA. I can't comment on FBAA, so I'm not part of that. But I do think bringing together not just your own aggregation group, but you know, I could help a female broker that's just down the road, say in Sale, and she's not part of my aggregation group, but she feels so alone. If she's a one-band show. So I think the MFAA can make a bit of a difference in that space to try and connect people a lot better, and maybe the FBAA. So that's probably a takeaway as well. That I think there's a bit of there's an opportunity there.
Well done, Jamie. Well done. All right, let's move on. AI. Now, we're all hearing extraordinary claims of what AI is going to do with us. Rob, we'll start with you. Are we going to be replaced as mortgage brokers?
No, I don't think so. I think, but the ones who don't embrace AI probably will be replaced. I think it'll be in the near future. So I think within 5 years, it'll be a consumer expectation that they'll be using AI because they'll probably use it themselves. So they'll probably think ill of the broker who they think they know more than. So I think that the ones who don't embrace tech and AI, I think will be replaced.
Simple as that. Sean?
I think you've got to train and educate yourself, Nick, and I'm doing that myself. This Saturday night, I'm going out for dinner with my wife and some friends, and it's been set up simply because he's an AI expert. He's a coder, and I'm going to go and learn more about it myself. Just that's what the dinner conversation is going to be. So it's going to be quite interesting.
You do that on a Saturday night. Oh,
Saturday night, having dinner with a tech guy. So
You leave an
I'll be
exciting
driving
life.
conversation, but I'll still listening. But yeah, so I think there's opportunities everywhere in our industry around AI. Whether even something as simple, Rob, as getting lender accreditations done quick. There's got to be lots of things that we can do for efficiency, and obviously for brokers, it's how you operate in your own business. Also, how you communicate with your customer. It's Scenario just got launched recently, which we've been working with. There's 200 brokers across our group that were testing that. And that's, asking the question around, which lenders do X, do an NDIS, blah, 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 and up it comes. And it's pretty accurate, right? But it doesn't have all lenders in there. But, that's an AI tool. So I think there'll be tools that'll come out. They won't be free. They may give us some efficiency, but there will be costs that come with it as well, right? So it's just a matter of choosing what's right for you. And for me, as an aggregator, a more boutique aggregator and franchisor, I should say, it's what tools can we invest in for our group. So that's where we're at.
that's an interesting one, Sean, and I'm going to go back to Rob on this. Rob, all the major aggregators would claim that their software is one of the major reasons that they are competitive and one of the backbone of their business, and we build it around our leading software. And I think up until now, that's certainly been the case. I think we're all agreed that AI, the landscape's going to change quickly, and it's going to, the pace of change is going to, just pick up and pick up and pick up. So I just wonder if I've got a massive investment in a piece of software, whether this creates a threat, and whether in fact I find, whether it's Scenario that Sean's just mentioned, or no doubt 101 other things that we haven't even seen coming down the line here, but it's just going to be an avalanche of stuff coming down. And Jamie's going to be presumably just building stuff herself because she can just ask the bot to do it. So is this a threat to an aggregator? Just tell me about that.
Yeah, possibly. Again, if the aggregators don't embrace it, like we've just set up a whole new division basically around AI and embedding that into my CRM. So firstly, looking at it operationally, like as Sean said, around the lender accreditation piece, around commissions, around all things internal, like using my CRM for our knowledge base. You can put in a question and AI will find the answer within my CRM. So we've got some pretty exciting developments coming in initially in the next 2 to 3 months around AI and embedding it into my CRM. But then further down the track, just continually working with it. So as I said, we've got to do what we tell our brokers to do, and embrace it wholeheartedly.
So, Jamie, you, the user, I mean, I think I know the answer to this. You've obviously got your aggregators software, but do you see yourself effectively building something almost as big that runs in parallel, or are you going to rely primarily on the aggregator software? How do you think it's going to look in 5 years' time if I look at the software suite that you're employing?
I guess it's like from a tech point of view, like LNG are brilliant to deal with. My CRM was a game changer for us in terms of process, productivity. AI, I think you're either going to have to adapt or be left behind. So ignorantly, I can see AI from a consumer like me from my point of view, being able to gather data quicker from the client. Like people are generally lazy. So if there was something that you could just talk to and dump all that information into my CRM rather than the client having to input it or develop it, or us physically having to input it in there, I see huge opportunity from a business point of view to be able to do that initial inquiry and health check with the client, just being all done electronically at their fingertips whenever they want. You can just be logging on, and my CRM or however the client is talking to us as a business, AI can just be getting all that information and just updating it in our system. How all that happens, I don't know. But I do think that there's huge opportunity there for to streamline processes, to be able to gather data quicker, because that's our biggest thing is time, the time it takes to get the information accurate into the system. So you are right though, from my point of view and from an aggregator point of view, there's two things I really care about is being paid on time and correctly, and tech. Tech for me is one of the most important things, because again, time is money for us and we want to be processing more deals. And I'm not just saying this because Rob's on here, but my CRM allows that. Our volumes have increased with the same amount of staff to be able to process deals quicker, and they do what they say they are going to do in terms of AI as well.
I should probably, because we try to be agnostic here at Trail Homes across the different aggregators, and I can also speak on behalf of the other major aggregators that they're all making huge investments into their software. So
yeah,
it is an industry trend. All right, lenders. I'm going to move on from AI and go to the world of lenders. We've got 4 major banks, and then we've got a plethora of other lenders. Sean, we'll come back to you because again, you've had probably more history in this. Are we going to see the continuing dominance of these 4 major banks going forward, or is it going to weaken, or is it what's your prediction?
I think it's going to, as long as the economy stays in a decent place, I think they'll weaken. There'll be other players that come into the market, or they there's a lot more. It's going to come down to what I suppose the return is for the lenders themselves as well. But big banks, obviously have had a very strong foothold for a long time, but that we have seen it starting to diminish with non-banks. They're getting more market share. Massive events in the economy we've seen had the opposite effect. The big banks, there's a flight to them. So providing all things remain equal, and they haven't been equal lately, have they, with what's been going on in the world? But non-banks will certainly keep driving and getting market share. Where are their advantages? If you look at non-banks, typically it's in borrowing capacity. Sometimes it's in flexibility. Sometimes people don't want to deal with a big bank. So there's lots and lots of reasons that people just don't go to a big bank, as all the brokers on this call would know. I think also innovation. When I was at LNG, I was quite proud of that we launched Apollo. Apollo was obviously a joint venture with Athena, and there's some innovation that come out of that. An app with a broker on the front and center of that app, where customer, you do an Apollo loan, customer jumps on, their app and they see Nick Young, my broker, on the front of that app. No one else is doing that. I know there's others that have some sort of some journeys where brokers have mentioned, but nothing like that. So I think innovation from non-bank lenders will get more support from brokers, and providing they're competitive, there's a strong appetite to support it from brokers in all the brokers that I talk to, that's for sure. And we need it to be competitive. That said, I think there's a lot of lenders, particularly in some of the segments that, in the non-bank space around specialisation, where maybe, I don't know if there's too many or not, time will tell, but, they're all fighting for a smaller pie, I suppose. But what's the impact of that? Well, it's reduced price down. So for customers, that's a good thing, but it's complicated, if that makes sense.
So, Rob, you're in a position to see broker flows here. In recent times, has the flow to the major four been increasing, decreasing, staying the same? What's your what's been happening historically or in the near past?
Yeah, year on year, the flows haven't changed too much. Like the top five are getting a roughly 60%, which is down from way back in the day, but it's 60% majors, then a further bit over 11% to their subsidiaries who they've purchased, like St George, Bankwest, etc. And the thing with the majors, they're important partners to the industry, I believe. And they do it, for the most, they do it pretty well. Like the non-majors, the non-banks need to basically be at the same level as those majors on a service perspective, but consistently, where we see some of the smaller players come in really good for 2 or 3 months, and then because of volumes and too much love, their turnaround times or service diminishes. So that's where I see if the non-banks, because all of them have got great offerings, great solutions in their sectors they want to win in, it's just getting that consistency, which the majors predominantly have had it, like especially like Macquarie, for example, have had been consistently good in a service perspective for best part of 4 or 5 years. So I think the consistency is the key to the non-banks or the non-majors driving that share down to them.
So it sounds like you're perceiving it as being a very competitive landscape, a very difficult landscape if you're a small lender.
Yes, because you got a real thin, having worked at a smaller lender for a lot of years, you've really got a small balance beam to work on, like how much flows too much and how much is not enough. And there's not much room for error, which the majors do have that greater broadness to cope with the ups and downs in flows. But the one thing I do see, I think lenders will increase, especially in that private space. The amount of private business getting written by brokers is staggering. We're not seeing through an aggregation, they're going off panel to private lenders. I think that is where I think there's going to be a lot of growth in that area.
Okay. All right.
That also,
Jamie,
that also comes with risk, though, Nick, is what I'd add to that. Just as I'm sure Rob and you are no doubt aware that, private lenders off panel, you've got to do your research and your due diligence. When lenders come on panel with aggregators and larger groups, they've done a lot of due diligence. So yeah, if you're a broker doing private lending, make sure you do your due diligence.
100%.
I couldn't agree more with that. And trail homes, when we're looking at we look very carefully at where the trail comes from. And, if it's coming out of a major lender, then great. If it's coming out of probably a medium-sized lender, great. But we're starting to get suspicious now of these small lenders and the reliability of trail going forward coming out of them. I think we're close to probably seeing a couple of these small lenders actually closing up shop. It's just so competitive and so tough for them. All right. Aggregation. So quick fire question. Rob, we're going to see more or less aggregators in 5 years' time?
5, probably, I reckon it'd probably stay the same. Payroll tax may have a bearing on that, but I think roughly the same.
Sean?
In my time at Choice, and if I reflect on the company I work for now, Choice, we had 3 acquisitions in the time that I went through, was working with the company. There was Challenger, there was NAB, and then Loan Market, obviously, becoming LMG. Ourselves, we've had 5 or 6 acquisitions we've done ourselves. So I think that with scale comes benefits because of the increasing costs. We obviously, the scale is where you can get your benefits in sort of controlling some of those costs. So I think there'll continue to be some consolidation. and some will get bigger. So yeah, certainly I think there'll be less aggregators, but I think there'll be those with an appetite to grow and scale will continue to buy others where the opportunity's there, and brokers the same. So
Okay, Jamie. So when you look at an aggregator going forward, and we won't sort of pick out LMG here because I know you aggregate through them, but if you were to sort of take a sort of a broader hat, what do you think your expectation of an aggregator is going forward, and whether you're going to, and this is probably the key question, whether you're going to become more or less reliant on them going forward?
I think that depends on the business and the broker, based on whether you're new to industry. Because I think if you're new to industry, I think aggregation is ridiculously important in terms of the support you get from your BDM, setup, structure. I think all of that to begin with is really, really important and can really cook you from day one if it's not right. So I think new to industry aggregation really, really matters. I look back like now 11 years in, and I love my aggregator that I deal with right now, but really I only go there when the shit hits a fan with something or I really need help. And for me, it's just being responsive, because I don't contact my aggregator unless I need something. So it's a bit like a BAS statement. I only do it maybe once a quarter or once a month or whatever it might be. But when I want something, I want it now. And that's, I guess, it's no different than a client expectation to us. So I think they've got to be responsive. I think they've got to be, if my aggregator was not looking at tech and AI and payroll tax and all of that sort of thing that clearly is in the media and in our industry, I'd be a little bit worried. But as long as, like I said to you at the start, as long as my commissions are paid on time and they're correct, tech and AI is there, and I've got people I know I can rely on, no different than, I guess, a client. As long as my deal settles at the right time, they communicate with me really well, and there's good tech, I think I'm happy.
Okay, good. All right, I'm going to stay with you, Jamie, and I'm going to turn you 180 degrees and turn you the other way around. What's your client expectation? What are you're expecting any great changes of what your client's going to demand over you over the next 5 years?
Absolutely. I think it's getting, as the generations come through and they're on their phones more and more and more, they don't want to wait to see a broker. The expectation is the opposite way around. I want to talk to a broker now. So I think, and we're even finding that now we have 4 brokers in 3 different offices, and we've got a bunch of admin behind us. And, if we're booked out a week in advance, clients don't want to wait. So then there becomes this whole shift in your business in terms of, well, do you have online brokers? What do you do? Because these people, I should say, like our clients, and they could have been clients of ours for 10 years, they don't want to wait, because they can just pick up the phone and call someone else and be in tomorrow. So I think that's a real shift. Whereas if I look 5 years ago, 5 years ago in COVID, when we had the boom in the construction space, clients of mine were happy to wait a week, potentially longer, just to come in and see you. Whereas now that expectation is, well, can you just squeeze me in? Like, I need to see you now. Everything's urgent. So you have to be, I feel like that we have to be able to deliver on that, or we have to contact the client before they're contacting us. And that's the challenge as well, so that they don't go somewhere else. I need to be contacting my clients before someone like me contacts your client or gets in front of them on social media, and then they contact us. And I'm more responsive than the existing broker. So I think that's the real challenge for the smaller firms out there is, well, how do you do that? And how do you actually contact that client when their 12 months is up? Because if you're not contacting them and they're in the Gippsland region or Victoria, rest assured, my brokers out there are going to be trying to do that. So that's the real challenge as an industry.
Okay, good. All right. Rob, Sean, do you want to add anything to changing customer expectations, or do you think Jamie's caught it all there?
No, she's got it covered. Wouldn't dare challenge that. Jamie's dealing with them all day, every day.
All right. Well, we're coming to the end of our allotted time. So before we sign off, I don't know, Sasha, have we got any questions there that we should be putting to the panelists, or we?
No, more observations which very much reiterate the panel's discussion.
Okay, good. All right, well done. All right, well, I might summarise then. I'll go around the panelists again and just, I love major themes and trends, and we've obviously been chatting for an hour now. So, Rob, we'll start with you. If you had to sort of think back about what we've been talking about, what's the major theme that you're really focused on? If you had to pick one, what's the big theme you think for the next 5 years with regards to mortgage broking?
Yeah, I think probably the number one theme we've all spoken about is embracing tech. And the other theme is just lean on your aggregator to give you the hand, because as a single man band or single woman band, it's a lonely existence out there as a mortgage broker. You're probably put to junk. Every bit of email that aggregator sends to a broker probably gets put to the spam or to the to be read later file. So just lean on your aggregator, lean on your PM, lean on your state directors whoever, or broker firstly, which we have an LMG, lean on your aggregator to help you embrace tech.
Sean, what's
Um,
your
yeah,
major
customer
theme?
service, Nick. Sorry, mate, jumping over you there. I know we've got 5 minutes left. So customer service, whether it be personal or whether it be, that connection with your customer, the personal connection, as well as embracing tech to keep, to support your efforts in keeping in touch with your customers. Jamie just touched on it. I think, having that, making sure that customer continues to know you is going to be important. There's 22,000 brokers around Australia. You mentioned at the start of the call. Banks are shutting down branches still. There was 100 odd last year, 50 odd, 123, 50 odd last year. That's continuing to happen, and it's I think it's still our secret sauce, having that regional, local approach, local consumer knowledge, local dealing with referrers. So using tech to build relationships, I think, is really important. And then scale, really. So as businesses want to grow, for me, it's us being there to help them invest in that. And obviously ourselves scale as well. So that would be my, we want to be bigger in the future.
I'm sure you will be. Jamie, what's your big, the major trend that you're looking at for the next 5 years?
I think interestingly, it's customer service, because AI, we're talking about the threat of AI, but for me, the bigger threat is somebody serves my clients better than us, and that's lost revenue. And I think that is AI is going to help be able to deliver better relationships to clients. And it doesn't matter, I believe, whether you're an aggregator, a bank, or a broker. Everyone has the same expectation. I think people just want good service, and I think AI is going to assist us, but I don't think that AI is not going to replace the relationship. It's just going to make it, I think, stronger and better if you adapt to the change.
We've got a question coming in here from Sasha, and the question is, what's the going to happen to the average price of a book over the next 5 years? Which is one that I wasn't prepared for, but I suppose I better ask for that. So good to be put on a spot, isn't it? I think we're not going to see dramatic change, but I do think it will be, if anything, it'll be slightly increasing. We are seeing this trend of, and we spoke about it during the session today, the consolidation in the industry. We're now seeing some quite financial organisations out there, some of them, as we've touched on, backed by private equity, and they are getting more aggressive in wanting to buy. So when you do the numbers, the values and the multiples are about right, but we are starting to see the birth of this larger, it's almost like a Pac-Man, wanting to come around and consolidate and buy up businesses. So I think that will keep it well supported going forward. All right. Whilst I've got the
Can I just add something to that, Nick? Sorry, do you mind? I think as businesses are more scaled too, they're selling based on EBITDA, where there's an ongoing concern, as opposed to just 3 times a book.
Yeah.
So, yeah.
And certainly at mortgage broker appraisals, when we do an appraisal now, we do both an EBITDA valuation and also a book valuation. The two should marry up, but it's a good cross check to make sure that they do. But you're very right, Sean. It's EBITDA is very much coming into the game. All right. Well, my key takeaway, and it goes right back to where we started, is the fact that our share of the pie is growing. And the bit that I particularly like, if we also then look at the pie, we've got more houses being built, we've got the population in the country growing, we've got the value of our houses continuing to increase. So if you look at those 3 things, our share of the pie, the thickness and width of the pie is also growing, this is a damn good industry to be in for the next 5 years. So that's my key takeaway. All right, we're really out of time, so I'm going to wind it up and say thank you to you all. Particularly thank you to our panelists, Jamie, Rob, and Sean. Huge thank you for Sasha, to obviously putting this all together today. Thank you, Sasha, and a thank you for everybody online for lending us an hour of your lives. Sasha, is there anything else we need to do before we sign off?
Say good night and good luck.
Good night and good luck.
But what we will be doing is sending CPD points to everyone who has registered today, including also the contact details of the panel should that be of interest. Thank you so much. We'll see you next time.
Thanks, Sasha.
Thanks, Sasha. Thanks, Nick.